Welcome everyone to Indian Bank fourth quarter results Concall. We have with us the Indian Bank top management, including Mr. Shantilal Jain, who is the MD and CEO. We also have the executive directors, including Mr. Imran Siddiqui, Mr. Ashwini Kumar, Mr. Mahesh Kumar Bajaj, and Mr. Ashutosh Chaudhary. First, sir, I would request you to briefly touch upon the fourth quarter results, the outlook for FY24, particularly in terms of growth, margins, asset quality. Over to you, sir.
Good evening and welcome to the post-results conference call. So as far as our business is concerned, it has grown by 8% in the FY23 and the deposit has grown by 5% and advances by 14%. On the deposit side, our saving deposit has grown by 7%. In a credit side, 14%. Again, RAM has grown by 12%. Corporate has grown by 12%. And the RAM sector, retail has grown by 13%. Housing loan by 11%. Auto loan by 28%. Personal loan by 46%. Now being recorded. So you must be seeing that continuously we are growing between 12 to 15%. In agri side, we have grown by 16%. And the agri side, crop loan 13%, but 70% of the crop loan is a JVAL loan, which is growing 20%. So virtually, other than this loan is more or less same. Investment credit has grown by 30%, agri allied by 13%, and SHG is growing by 44%. So agri is grown by 16%. MSME has grown by 7%, but the MSME, you see, ECL GS loan we have given around 11,800. So present outstanding is around 7,000. So 4,000 has come. So if you factor in, we are here again, we are growing around 11% or so. In a standard corporate, of course, we are seeing 12%, but since we are writing it off also, the standard corporate is growing 17% and the mid corporate which is growing by 19%. So you see all components of the credits are growing. In the deposit side, we are growing by saving 7% and deposit by 5%. This is the business. Now the profitability side. So you see on a YOY basis, on a QOQ as well, the operating profit has grown by 20% on a YOY basis and the net profit by 34%. And in a quarter, operating profit and net profit both have grown by 47%. So the growth of the operating profit is based on the NII growth. The 47% on a quarter to quarter. This 29% is a NII growth. That is the main reason. Bad debt recovery is 337%. Fee income has grown by 12%. The fee under fee processing is grown by 20%. Cross-selling 41%. If you see the year on year again, so NII has grown by 21%. Bad debt recovery by 35%. Fee by 16%. Under fee processing is grown by 21%. Again, cross-selling 58%. Forex 46%. So you see in all segments of our NFNI income is growing, our business is growing. So as far as our margins are concerned, the margin was 2.91 for the last financial year. In the current financial year, it is 3.41. If quarter on quarter, you see it has come down from 3.74 to 3.59. This is the NIM side. ROA for the year is a 0.77, but you see the quarter, it is 0.82. Likewise, the ROE for the year is a 14.73, but in the quarter, it is a 15.48. Cost income ratio, which was 46 in the last year, is 44. And the cost of deposit has increased from 3.97 of last year to 4.09. But the yield on advances from 7.21 to 7.76. So here you see that our cost yield on advance has grown higher than the cost of deposit, but in the last quarter, of course, the cost of deposit has grown slightly higher. And one reason is that the interest reversal is also one factor. The GNPA has come down from 6.53 of the last quarter to 5.95%, and net NPA from 1% to 0.9%, and the PCR at 93.59 to 93.82. So gross has come down both YOY and as sequentially. Net NPA has also come down. PCI also improved. So, the capital adequacy ratio 16.49, but you see the CET capital is increasing in spite of increase in credit by around 57,000 crores. So which we are telling that our generation will be adequate to take care of our growth, which has been proved by these numbers. Now you are talking about the margins for the next financial year and the credit growth or the deposit growth. So credit growth, we have given a guidance of 12% plus minus 2%. So as against this, we are ended with a 14%. So we are always conservative in giving the guidance. So here again, our credit growth is 10 to 12% for the next financial year, and the deposit is again 8 to 10%. So you see here the deposit is 5% or saving 7%. So we have done number of changes in the deposit side. Not only we are onboarding the customer through tablet banking, we have organization structure wise also we have better huge changes here at the zonal office level, at the FGM level also, because deposit is a challenge. But as far as over liquidity is concerned, we are at a 158% LCR. We are having again a 36,000 excess SLR. So that liquidity wise, we are comfortable. So I rated you the business number, the net NPA number. Of course, going forward, the net NPA and the gross NPA should also come down. And you see our ROE is already, we are at 15.1. So it should be better. We expect that the 23-24 will be better than again this 22-23. So I along with all my four EDs are here. If you for 2 or 3 minutes, I want to talk about the digital. By my colleague Mr. Majaz will tell you where we are in digital.
Thank you, sir. Can I show the PPT, sir?
No, you speak.
As far as the good evening, everyone. As far as the digital is concerned, during the last financial year, bank has taken various initiatives on the existing core banking and new technologies, the existing platform enhancement on the cyber security. Our UPI transaction now per day is 1.25 crore and mobile banking is 22 crore. Apart from that, the digital channels, our Q1 March 22 was 77%. Now the digital transaction are 85% and branch transaction has gone down to 15%. Same way, the mobile transaction also gone by 68%, and in the UPI also we have grown by more than 100%. Last year we onboarded DLP, digital lending platform, as well as the omni channel. We recently started certain journeys on the RAM sector. We have completed close to 20 journeys end-to-end digital, and we garnered the canvas digital business close to 5,200 crore in retail and 300 crore in agri and MSME 60 crore. And we are planning to do another 15 to 20 journeys by July end. With that, we are hopeful of doing the business almost 7 to 8 times from the last year. As far as the DLP as well as the omnichannel, we are coming with a new app in the next the first half, where we have the device agnostic omnichannel experience. The customer will be having on the mobile, internet banking, kiosk, or other channels of access, the same experience and same kind of facility. Apart from that, we have because our CBS is old age and a lot of customization was done. We have already gone with the middleware with the CBS APIs, where we can now have the partnership with the other fintechs as well as within the bank also. We have onboarding various vendors. The APIs are easy. And on the cloud technology also, we are already on the public cloud, on the smart office, and the private cloud we are planning for the core banking this financial year. On the information and cyber security also, bank has taken a call to strengthen. And last year also we spent good amount of money on this, and this year also we are planning to go for the advanced cyber SOC and new vectors. And bank has created an analytics center of excellence for the new initiatives on the analytics side for the new journeys. Apart from that, the data warehouse, data governance, data cleaning, etc. is going on in this part. On the customer relation management, we are onboarding the vendor for the CRM for the customer 360, marketing and operation side. And we have created one more vertical for the benefit of our corporate customers, the CMS. On the HR side, we have created the 100+ persons dedicated digital organization setup. And because various journeys and various new initiatives have been taken, we have this 900+ dedicated digital banking champions are onboarded to drive this digital agendas in the team. And already I have told more than 20 journeys completed, another 20 will be doing in the next half years. Thank you, sir.
No, we are open for questions.
Thank you, sir. Are we good to take Q&A?
Yes.
Sure, sir. First question is from Mr. Ashok Ajmera. Please limit your questions to 2 maximum.
Good evening, sir. And yes, compliments for yet another good set of numbers for the quarter and as well as the whole year. And a very good progress, especially the credit growth is also, more than the guidance given. And what is heartening to note is that almost about 10,000 crore growth in the corporate book only in the this last quarter itself, as against many of the other peer banks where the credit in the last quarter is a little bit muted. So going forward, don't you think that your target of 10-12% is a little conservative on that the way our bank is going? This is one thing where we would like to hear more about little optimistic numbers. And sir, now with our CD ratio going 76.24%, of course you have the extra SLR. So how do you plan to grow the book as well as the match the CD ratio also, and up to what level you will be comfortable to go up to in the CD ratio? This is one on the credit and this. Sir, other thing is on the this recovery and NARCL side. Our recovery, cash recovery in this quarter is good. Even SMA 2 is also under control. But now the major recoveries will come through the NARCL and the NCLT. So some little more information color on that what kind of recoveries we are. I think we had 22 accounts in NARCL and then 9 accounts of already been bids are received. So little more detail on that if you can give. And sir, on the treasury side, now that the things are improving and the rates are softening up, of course treasury performance is that way. We can call it as good. More than 1,100 crore of the income in the segment wise if you see in the treasury, but it is lower than the last quarter. And even the MTM or the loss on the sale of valuation of the securities, the profit is also very meager as compared to what it was in the last quarter. So some of these points are there, sir. And one thing about the extra provision which we hold, because we have seen the 2 notes where the 1,556 crore and 1,071 crore the provisions are there. So more than the IREC, like you have 520 crore more than the IREC in note number 20 also. So if you can give the color, the buffer which we have of the provisioning, because you are a very prudent banker and astute banker, I would say, a chartered accountant, and must be playing well with the numbers. So some of these are my questions and observations, sir, in this round.
Thank you, Ajmera ji. So I'll give one by one answer of all your issues. So we are a little bit conservative in our guidance end. So that is why 10 to 12% we have given you. Earlier also we have given you guidance 12%. We ended with the 14%. So that we will continue to have that kind of. But you see the growth virtually 17% we have grown in corporate and 19% mid corporate. But we are focusing more on a mid corporate. We have already opened around 25 branches for mid corporate to take care of mid corporate business where the margins are there, right? And all our engines are growing. That you see, agri side, child loan is growing 20%. We are having a 270,000 crore of a book which is growing. So in a retail also 12%, 13% will continue to have that growth. So we are sure that we'll be able to achieve this 12% number. Now, second point is your treasury number. You said the profit is little bit. So you see what we have done. We have done a lot of churning in the last quarter in a treasury book. And as a result, our AFS holding yield has improved to 7.15. The current rate is around 7%. So due to the churning of this, the profits are not appearing more in the P&L account. But the fact remains, we will continue to have a good profit in the time to come. In the time to come. Likewise, our holding yield on the HTM book has also increased. So this is a conscious call to have a better yielded investment. So when the interest rate will increase, even then we will continue to have a good interest income. That is a whole object of doing so. So to protect our margins and all. This is the strategic call which we have taken. Now the third point you were talk about the NARCL and all. So around a 6,200 crore of a book which has been identified to be by the NARCL. Half of the accounts we already received the bid. And around a quarter is under process, and quarter intentionally NARCL is kept on hold. So what we think that these are all accounts 100% provided because our PCR is 94-95%. So when the bid is received, we are expecting money. In some account even we are expecting the government guarantee. You know the SR is to be government guaranteed by the government. So we are expecting a guarantee. Then some of the account will shift. So going forward, we should have a better recovery in the recovery part.
So, sir, sorry to interrupt you, sir. On this SRs, when you receive or you received government guaranteed, that also you are going to provide 100%, or that you are going to take the income or some hit in the investment book on that SRs.
Point is that we are having 100% provision. We will continue to hold that.
Okay.
So whatever cash we received will be an income. Otherwise, we will be keeping our balance sheet strength. This is our policy all along like this. Now the point you raised about the extra provisioning you have made on 2,200 crores. So what is the weakness of the balance sheet? All others are good. Our net NPA is 0.9. So this issue is in a restructured book basically. Restructured book. And when you see even the ECL guidelines of draft ECL guidelines of the Reserve Bank of India. But they say this restructuring should be near to the NPA numbers and all. So provisioning may increase if the situation so arise. So what is happening in the restructuring book? Of course, our restructuring number is coming down because when you receive a 20% or 30% amount, it is out from the restructuring book. Even then, we thought that we should increase our provisioning in the restructured book. But we are having 11,000 crore of a restructuring number we are having as far as COVID is concerned. In addition to that, around 3,000 or 4,000 tranche 1, tranche 2, and DCCO where the 2 years has already been. When you enhance the DCCO by 2 years as per RBI guideline, it is to be classified as a restructured asset. So around 15,000 crore. So we have met 20%, 3,000 crore. Now fact remains, what is the risk we are having in the book? That is important. So in a DCCO against the 3,500 crore, 3,000 crore is already the COD is achieved. But as per the existing guideline, it will be out from the NPA after 2 years.
Okay.
So that is one part of it. The second part of this is that restructuring book. What we have done restructuring, 18,000 crore of a book, we have originally done the restructuring. How much have been slipped? So around 92-93% of the restructuring we are getting money. So NPA is 7 or 8%. Even then, to prepare ourselves, we have created additional buffers. And it is always said that in a good times, one should create a buffers to take care of future. That is based on the prudence we have done this. This is the third point of view. And one risk is that in restructuring, if any account goes bad, now what happens? It goes from the retrospective effect. Always. Of course, based on our conduct of account, there is no issue. But we should have to have adequate provision. Or suppose the ECL guidelines come next year, this year, bank should be fully protected. That is the object when you are passing through a good times. This is a based on prudence freedom. So what is this? The third point of yours. right? What is any other point, sir, which I have missed?
No, sir, you have covered all the points. I just wanted to understand that other than the IRAC norms and RBI requirement, what aggregate total buffer? So around, I think, am I right if I take it as around 3,500 crore of total?
No, we are having a standard asset provision of 6,000 crores. 6,000. And we are having a net NPA of 4,000 crores.
All right, sir. Yes.
So bank that way, fully protected, sir.
Okay. So anyway, thank you very much, sir. And I'll come back again because otherwise, Anand.
Our point is a margin point is a big point, but sir, as I could not complete in my earlier. 3.74 to 3.59, and going forward, everybody is seeing that when the interest rate will increase, the cost, because and the cost of deposit will increase, how will you be able to protect your margin? This is a big question. Even Sahib is the initial point. So one aspect I've already clarified you in the investment what we are doing. Second point is that we think that we are in the near to peak levels. So what we are shifting, some of the repo link we are shifting to MCLR. So our MCLR number, which was 56% in December, we have moved to 59%, and repo, which was 34, because what happens if the repo will come down of course, that maybe we expect the last quarter, and again, depends on the inflation, and inflation depends on the monsoon and all, right? But we should be ready to that. In addition to that, we are also coming out with the fixed loan products. So what will happen in the situation that interest rate will come or repo will come down, we should be able to protect our margins and all. The third point, you can protect your margin. So you should take the deposit based on the need. So you see what happened. We have not grown the deposit in the last quarter, but at the time the deposit rate is 7.8. You see the CD rates of March and the CD rates of now. You will find that the interest rates is softening. So that has a considered call we have taken. Of course, the growth, you are saying that growth is not happening, but it was a part of considered call when you are having a 158% of the LCR, when you have excess SLR, why not borrow at 6.5%, is again 7-8%. And we have built the treasury also. At that time, at a 7.4 was the rate. So this is a time for us to make money. So these are all a part of your decision making or how you run the organization.
Thank you, Ajmera ji. We have next question from Satyan. Satyan, please go ahead.
Good evening, Mr. Jain. Great set of numbers. My question is just leading on from where we set out for NIM. So I guess NIM guidance you are saying is 3.7 to 3.9%. Is that right?
NIM guidance. NIM guidance, actually, that NIM 3.41 year as a whole, right?
Right.
3.59 I'm sitting.
Right.
3.59. So our endeavor is to protect this 3.41 number and all. We should be able to protect our entire endeavor will be on that. There is 10 bips here and there, 15 bips here and there. Time will tell, sir. But our endeavor will be that.
Okay, great. And next question again on provisioning. So you are still provisioning at a pretty high rate of 2.5% of, I guess, loans. Just wondering, and now I guess net NPAs are down to 0.9%. So what sort of provisioning are you going to do towards NPAs, and what excess provisioning are you thinking of doing for FY24?
No, so point is that our net NPAs come down.
To ask that question, but given how aggressively you provisioned, I think provisioning should come out materially going forward.
No, point is that we are having a 0.9% is a net NPA. So going forward, our provisioning needs will be less as compared to the last year, because we started from 2.27, now ended with the 0.9. Right. Naturally, the going forward of provisioning need, and we have created the buffers in the process also because the time was good. So going forward, our provisioning will come down, sir, substantially.
So any guidance on how much excess buffer you still want to create for FY24, and how much actual
So buffer has no limit, sir. Buffer has no, but ideally, since our net NPA has come down, so provisioning will be less, sir.
Okay, substantially less?
Substantially less.
Okay, great.
Right, sir, substantially. It should be, because 4,000 crore is a net NPA, na?
Correct.
And your SMA book you have seen, and the restructuring book where 90 to 93% are going good. So going forward also we are not seeing much challenge here.
So that 9,300 crore number should probably come down by 50%, I would imagine, going forward. I'm not trying.
It is very difficult to say in terms of numbers, but it should be substantially down, sir.
Okay, great. Thank you.
Thank you, next question we have from Dikshit. Dikshit, please go ahead.
Yeah, thanks for the opportunity. A couple of questions. First question was just related to what the previous participant has asked. So this quarter, the provisions of NPA was only 1,040 crore, but we did almost 1,450 crore for So this kind of run rate in standard advances will continue, or even that will come down? Because as you rightly pointed out, the net NPA is now 4,000 crore only. So obviously this NPA provisions will come down, but we will see the overall provisions will also come down. And second question was, by when we have to dilute the government holding below 75%? So any update on the QIP we might look to do?
Okay, so point is that there is no doubt, sir, by provisioning will come down. There is absolutely no doubt, because the net NPA has come down and buffers also we created, right? So going forward, it should come down. So second point is that your capital raising and all, right? So what we have said that our generation will take care of our growth. So if CET capital at the beginning, when we started the year, was 12.53. Now it is 12.89, 36 bips higher. And we see the advances from 415 to 474. So around a 59,000 crore of advances we have done. Even then our CET is higher than this. And in spite of that, we have declared the dividend of 86%, right? So this is clearly showing that my generation will take care of my growth. Even then, we have taken a board approval for raising both CET capital and the Tier 1 and the Tier 2 capital. These are the enabling provisions which we have taken last time also, sir. Now, fact remains, if the opportune times comes, we will take. Otherwise, what happens? These are all, suppose Tier 1 and Tier 2 won't we take? It is at a higher rate than the interest rate what we are getting. So in that situation, you will be losing, whereas you are having a good capital adequacy. So based on the need and all, we will take a call during the financial year. I agree with you that our present government holding is higher than 75%. So these all provision will take care of in case we come out with the capital raising, that it will come down from 79.86, which is presently having 80%. But everything will depend in the next financial year how profitabilities will come. But we will be having the enabling provision from board as well as our shareholders.
Okay, and so just to confirm what you have said, so as you rightly said that since the net NPA is now only 4,000 crore, so NPA provision should come down, and that's what we were expecting from last 2 quarters, but that was offset by the standard provisions on the standard advances we did. So now you are saying that overall provisions will also come down since we have created enough buffer as well.
Right, sir. Right, sir.
Okay.
Right.
Okay. Right. Thank you, sir. That's it from us.
Thank you. Next question we have from Maruk. Maruk, please go ahead.
Hello.
Please unmute your camera.
Yeah. Hi. So, hello, sir. Hi. Good evening. So my first question is on current deposits. So what drove the slightly stronger growth in current deposits? And then my other question really is on deposit cost. So just over the weekend and today, suddenly a lot of banks are guiding that there has been so much of premature withdrawal of deposits that there has been an early repricing of the outstanding or back deposit book. And because 90% or 80% of whatever that figure is of outstanding or back book deposits have already repriced, now cost of deposits and funds can stay stable, which then kind of suggests that, margins can actually move up slightly in the first quarter. Do you subscribe to that view? I mean, you also guided to a full year margin expansion from the 4Q levels, but just in terms of how it will play out in the first quarter and what percentage of your deposits have actually repriced and how much is pending?
Margin expansion, basically, margin expansion has two factors. One is in an advance side, whether you will be able to pass on increase in repo, and the second time, the cost of deposit. These are two factors. In fact, in a credit side, you see housing 250 bips as an increase in the repo rate, but in a housing loan, we could be able to pass 170 bips, or auto loan 180 bips, right? Or a jewel loan around 190 bips or so. So we could not pass entire 250 because of the market competition. If we increase 250, then we become less competitive in the market. So this is the one part of this credit side. On the deposit side, again, it depends on the duration of your liabilities. So but the point is that from May 22 onwards, the repo has increased, right? But it is over a period of 7 or 8 months. And generally 1.5 or 2. Near our duration maybe around 1.5. What is the duration? 1.5 or so. 1.6 is our duration of our liabilities, right? So some part of it will come for repricing. But you see, 59% of my book is MCLR. So this will take care. Second point is that you see, I have excess SLR and all. So what will happen? There is a suboptimal use of money also sometimes. When we will convert this money into a credit, naturally the interest rate will be high. The third point is what happens when the earlier time, when there was the excess liquidity, so pricing power is virtually with the customer. Slowly we are getting the pricing power because of the increase in interest rate. So we will be able to pass on at a higher cost, a higher price. So putting all these two things together, but I told you that we will be able to maintain our margin of 3.41 of the last financial year. Because these are all based on liquidity. You can't, earlier people used to take money at 6%, 6.5%. Now nobody is giving this money at 6.5%. But in case of my margin or yield or advance, that amount was that. And that low rate of interest. So first point over your increase in the credit growth. Second is your pricing power, right? Third is your MCLR increase. These are the one side of the lever. Other side of the lever is of your increase in cost of deposit. So we will have to match this. This will be our endeavor.
Got it. But your deposit maturity has not gone higher, or there has not been any accelerated repricing of deposits. Would that be a correct statement?
No, madam. Point is that accelerated cost means there are two parts of the deposit. One is a bulk part and one is a stable part, right? So in our bank, we are bulk deposit, same number which was having in that 22, we are having more or less the same number in 23 as well. 17-18% about that part. Remaining is all our stable deposits. And you see in CASA side also we are 42%. So basically we are not on that you are having a 30% bulk or a 35% bulk or a 25% bulk. Where the repricing may be the issue. For us, we are a stable bank and we are not growing 20% that you need money at this rate.
No, sir, I was not talking about bulk versus retail. What I was saying is that a lot of banks are complaining that even within retail, there is a premature withdrawal of deposits for deposits.
We are not having that kind. We are not having that kind of concern.
Okay, perfect, sir. Thank you.
Thank you, Maruk. Next question we have from Mona Ketan.
Yeah, hi sir, good evening. So firstly, we have seen higher MSME slippages this quarter. So just wanted to understand if this is primarily from the restructured book or is it from the normal standard book?
So you out of 2,500 crore of slippage, 1,300 is MSME. So around 50%. Right. Out of 1,300 crore, 700 crore is from the restructuring book. So this, because this is slipped of the restructuring book, it is impacting my NIM also slightly. And okay. Again, the 110 crore is from the ECL GS book, where of course we'll get our money.
Okay. And so, since you mentioned in restructured, there is this retrospective effect on interest reversal. So, what are the total interest reversal this quarter?
Just a minute, I'll tell you. Just a minute. My interest reversal for the current quarter, 236 crore, ma'am. Okay. Secondly, age against the 139 of the last quarter. So 100 crore more virtually. Got it. That's useful. Secondly, you mentioned MCLR book of 59%. So how much of this has already been repriced so far? No, this is an ongoing situation. My point is 1 year out of this again, 59%, around 40% is a 1 year MCLR, right? Okay. And around 6 months is a 14%. 14% is on a 6 month MCLR. So this is an ongoing basis. What is the issue? Issue is that 730 was the original rate in May 22 and 855 today we are having, right? So that 125 bips. So those which have been priced 730 a year back will have a repricing of 855 in the first quarter. 125 bips. So this will take care of our major part of increase in cost. Right. And when you say 40%, this is 40% of advances, the 1 year MCLR book. Right. 40% of the total book. Okay. Which is the total advances of the bank. 8-9 lakhs. Okay. Got it. And just finally, do you have any sense of the ECL provisioning requirement that we may come across over the next few years? No, ECL, madam, we are making provisions, right? So what is the ECL? Actually, I'm telling you ECL again. We have given 11,800 crore of ECL, yes, entirely. So today's outstanding is 7,200. ECL. Expected credit loss. Okay, ECL. No, ECL, final guidelines are yet to come, ma'am. But two things are sure based on that. There will be higher provisioning requirement for restructuring book. Right? Okay. And the SMA. These are the two things basically. This will going to happen. So all banks are having higher provision in NPA because we are 94% PCR. So there we are having a surplus provision which we can use partly for the restructuring book. Got it. But no early calculations as to how much could be the overall requirement. So let the final guidelines come, no, madam. We have given our observations. They have come out with a draft guideline. Got it. Thank you. That was useful. But we are preparing ourselves. Sure. Thank you and all the best. Thank you.
So when you said that you are preparing yourself, does that mean that you have already started building additional provisions, assuming that norms?
Yeah, that is the crux of the ECL is the expected loss. Expected is what is incurred, you know. Expected is out of what? Expected is out of your restructured, out of your SMA.
Right. Sir, is that
the difference between the incurred and expected is only expected, na?
So basically, I think the question which came from Mona was also primarily because Canara Bank, earlier call said that the overall ECL incremental requirement for them is like 420 odd billion, which is almost like 7% of their capital possibly could get wiped out.
I don't know that, but we are preparing ourselves. So our issue, which I understand that I need to build some provision for restructure, which we are already built.
Sure, sir. Next question we have from Mr. Sushil Chopra. Please go ahead.
Congratulations on very good numbers to Team Indian Bank. So my single question, as you have answered most of my questions, your outlook on treasury you answered, but do you estimate huge profits in the current year? And second is, knowing your past track record with Bank of Baroda and Allahabad Bank, what is the roadmap for Indian Bank to be future ready? So you've rolled out many products, but what are the other enablers you will put along with these products that Indian Bank will take all the peer banks and the bigger banks also on various segments?
Thank you, Chokshi. There are two issues basically. AFS book. So I told you that our holding yield is 7.15 and the current is around 7%. So there's a gain there, right? There's 1 point. So that we have to decide how much gain we will have or interest we will have. That is the decision to be done by us based on our own decisions. But second point is how to make bank future ready. So you know that we have already, the way that Bank of Baroda or the State Bank of India has got the permission to create a subsidiary for your operational needs, we also have got the permission. We are the third bank we got the permission from the Reserve Bank of India to create our own subsidiaries. So we are in the process of creating our subsidiaries. What will happen subsidiaries? Then we will also have some of the work we will outsource to them, even the marketing work, even the day-to-day back office work. So that will save my operational cost in the time to come. The second thing which we are doing. Now the third thing is a digital, where we are doing number of things. Bajaj has told but we are doing a digital one in a core and other is a customer side. So core side also we are doing number of things. Core side is a middleware, the omni-channel, right? The cyber operation centers. So the number of things we are doing the core side also as well as the customer side also to offer more and more products to our customers digitally and in the mobile banking. So what we have done again, first we decided let us increase our mobile registration. So we have double 58 become 115 and we again want to go double. We are working totally on that. So this is the market is available. If your mobile penetration increases, your market you created. Now the second point is that to offer the product. So offer digital journeys we have started. And third, whom to give this digital journey? So analytics center of excellence we have created. So this analytics center of excellence based on the past trends, based on our rule engine will decide this particular customer we can offer this product, whether the pre-approved personal loan, pre-approved business loan, top up in housing, top up in auto, and others, and based on the past history, or even the MSME, based on the GST, SI or BS, based on we have had integration of the GST. This is the third thing we have done. So the journeys we have already launched. Now what we are doing, the change management office we have created along with the general manager app. So we are giving training to our people to understand the digital. And again in a digital, we have gone with the three different ways. One is that we have gone with the mobile, we have got the internet, and third one is the assisted journey. So suppose my customer, all of the customer are not so digital savvy because we are having 10 crore customers. So assisted mode is also there. The customer comes to the branch, you do digitally. So that way, slowly we will be able to create digital asset. Again, 2 or 3 things will happen. My data quality become better and better and better. So I will use my analytics center of excellence and offer the products. One thing we will going to do. Second one, my OPEX cost will come down. So in all this way we are working. In addition to the digital side, in entire year, last year we changed the performance management system of each and every employees, each and every officer of the bank has a KRAs. And the KRAs we are given based on the work he is doing, and we have kept the lever. Suppose this time the deposit is a challenge. So we are increasing the number for deposit. Earlier 12 marks, now we will be having 20 marks. So everybody will work for deposit to get their better PMS score, to get the promotions and everything. So this is also we are doing. So in number of ways we are working from the employee side, from the digital side, from the customer side, from the IT side, from the cyber side. We have recruited people from the market also in IT, in a cash management, a number of other fields.
Sir, based on all the initiatives what you've taken, One is, what is the total spend you would like to achieve over a period of 2-3 years to make things ready? And second is, you are sitting in a hub, which is a very knowledge-based states, southern India. Your competitors are big NBFCs like Sundaram Finance, Chola, Aptus, many other, Manappuram. Are you seeing your initiatives giving you a higher market share compared to competition with your products being rolled out at your customer level?
So let me tell you, my number itself is saying the first year of amalgamation, we were having a profit of 3,000 crore. Second year, we are having a profit of 4,000 crore. In the third year, we are having a profit of 5,300 crore. So you see that our business is growing, our profitability is growing, our synergy is coming. Now, Bajaj will tell about our expense. Oh, this technology cost. We are incurring huge cost.
Sir, here on the IT investment, we have couple of the categorization, where on the capacity building, IT infrastructure, then analytic, then consultancy, then cyber security and new technology. So in last year, almost we have spent 1,600, and the next year also is in the line of maybe 500 to 600 crores spent will be there, sir.
So you see 1,600 because you see every project takes time to give you results. So we are making bank future ready from the digital side as well.
So how much of loan growth are you seeing in gold, auto and LAP or?
Sir, you see auto is 28% we are growing. We will continue to grow. Gold we are growing 20%. We will continue to grow.
Can I take that as more or less a guidance over the current base?
Yeah, this is our history says, no, sir. So we will continue to grow on that numbers.
Thank you, sir, and all the best. Congratulations and best wishes for the years to come.
Thank you, sir. Thank
you, Mr. Choksey. Next question we have from Rakesh Kumar. Rakesh, please go ahead.
Yeah, hi. Yeah, thanks a lot, sir, for the opportunity. Very strong performance on the provisioning side and creating buffer for future. That's a great performance. But sir, on the balance sheet growth side, the growth, especially on the deposit, is quite low.
Please.
Yeah. So deposit growth has been, quite low as compared to the system, and we are still looking at around 3.4% margin. And next year also we are, projecting margin, giving guidance of around the same level. So are we also going to use the lever of excess, LCR that we have and the LDR, which we can, further improve? So are we going to use these two levers to further enhance the margin? Is there a room? Is there any thought process on that front?
Yeah. We will be increasing our deposits and this excess part of the money also we can use. The fact remains, last time we could have grown more, but we take the deposit based on the need in a wholesale market and all. But we would like to grow granular part of the deposit, salary accounts. So what we have done here, again, we have created 4 or 5 GMs even for liability, which earlier used to be the 1 GM. We have created a government relationship cell at various locations, either in Tamil Nadu, Chennai, or Lucknow, or Calcutta, or Delhi, or Bhopal, a number of places. So we are creating infrastructure, organizations, people to garner granular deposits. And we came out with various products as well. So that off the shelf also we can offer. Suppose we are taking a salary account from any borrower, then we can offer them insurance and all. We have created a number of products which we call a Sampurn Suraksha or Sampurn, wherein we are giving insurance also free, right? We are giving other benefits as well. So these are all products we are offering to our customers. We do understand that we need to grow more on the granular part of the deposit.
So this guidance of 3.41, a stable margin in the next year, is that considering utilization of excess liquidity and increase in the LDR, or without using that?
This is a combination of all these, sir. you can't say, but fact remains, what will be the increase in cost and what will be the revenue? So we have considered all calculation and come to that we should be able to protect. But of course, everything 10, 15 bips here and there can always happen.
Thanks, sir. Thanks, many thanks, sir. Thanks a lot and all the best to you, sir.
Yeah, thank you, Rakesh. Next question we'll take from Mayank Gulgulia. Please go ahead.
Yeah, hi, sir. Thanks for taking my question. So we have term deposit of 6.2 lakh crore. What portion of the term deposit is likely to come for repricing in next 12 months?
Just a minute. But you see, 1.6 is our duration, right? So naturally, 1.6 means divided by 4, 6, 15-16% na per quarter. No, per quarter. 15-16% per quarter.
Okay. And what would be our outstanding cost of term deposit?
Term deposit? Outstanding?
Like term deposit 6.2 lakh crore which we have, what would be cost of deposit of that amount?
So we are having term deposit of 3,60,000 crore, right, sir? And our cost of deposit is just a minute. Our cost of deposit is 4.33%, right? That includes the CASA part, right? So 40% you exclude.
So total deposit.
So you do, sir, one math for me, right? So 4.33% is a core, and 40% is at a 3%. Remaining will be the cost of deposit for term deposit. Na?
Okay, sure. And this quarter we created 1,400 crores of provisioning. So how much of this is for restructured loan and how much is this for other standard assets?
No, what we have done at a 20% provision for restructured book, which includes 15,000 crore, 11,000 COVID plus DCCO and all, tranche A and tranche A2 all put together. So this additional provision we have created.
And this where would be comfortable level of provisioning for restructured loan?
No, the fact remains that we should need to build our provision. That was the object, right? And you see that 92% of the advances we are getting money. So to my mind, the issue is only the 7 or 8%, na? So 7 or 8% of 15,000 is 1,200 crore. We already have a cushion, na?
So 20% is comfortable level for provisioning.
Seems to be age on date seems to be at a comfortable level, isn't it?
Hello?
Yes, sir.
Mayank, are you done? So we'll take next question from Manoj Halim Chandani.
Yeah, Mr. Jain, thanks a lot for the opportunity. Couple of points. One is on the operating profits. We have seen your numbers for 23 are very good, but Q4 there is a slowdown. There is effectively no incremental growth in operating profits. So can you elaborate and explain what are the issues and how much growth we can expect in FY24? Number 2 is on capital adequacy, and there were a few questions and issues on ECL. Now we have seen on the ECL side, RBI is having responses from many banks, the top private banks, top tier PSU, and also the second tier PSU. Now there is a talk of a hybrid system. One is ECL and also based on the circular on actual, which has not been implemented anywhere in the world. But the current system of AQR and provisioning has resulted in healthy banks in the last few years. So, and also another point, coming on this is some of the banks have represented to RBI and the government to defer the implementation of this ECL for next 2 years, and also the spread instead of 5 years should become 7 years. And the private banks have already doing models and sharing it with the RBI, and they had done accelerated provisioning. Indian Bank is known for very high asset quality, particularly in the last 3 years, and you are strengthening the asset quality every year by accelerated provisioning. I would like to know your views, particularly on this ECL consultation paper which was issued, consultations going on, the hybrid matter, and what is your view? Are you ready? Because along with SBI, you are known to be a very high quality bank in terms of asset quality and also among the lowest in cost of deposit. Another thing, last few days, in fact, for quite some time, the second tier, the PSU banks, like Bank of India, Canara Bank, Union Bank have started sharing their numbers. Bank of India mentioned about 25,000 crores. And Canara Bank talked about, the Union Bank talks about 35,000 crores. Canara Bank number is much, much higher, mainly I think because of the syndicate bank merger earlier, absorption. So what is your view and what can we expect? And for this reason, the RBI is encouraging banks to do fundraising and take the money when the market is good, and today the valuations are quite good, and some of the banks have started having the plans. So why not raise the funds and build up capital adequacy further? If you can address it, then I can take it maybe one more point later.
Okay, thank you,
And
sir.
for
So
a finance person, your accountant, you know ECL and hybrid system very, very well among the very few MDs of PSU Bank.
So thank you, sir. There are 2 points you raised. One is a operating profit on a sequential basis. It was 4016 is against 4061. There, one was the first question. So what we have done, sir, in the current quarter, we have made a salary provision of 177 crore is against 75 crore of a last quarter. So 100 crore extra salary revision because the salary was due from November. So earlier only 2 months, now it is a 3 months. Second one is a employee benefit, which we have made a 700 crore provision, this is 548. And the third point is that in the March quarter, there are 90 days is against in the December quarter, 92 days. And we are earning interest on a daily basis. So naturally, that also 150 crore of 5,000 crore of a NII, it will impact my NII. These are 3 major reasons. And fourth one is the interest reversal because of this. And these are the 4th major reasons. Otherwise, you see the numbers are going good, sir. Also, you asked about the ECL and all. Of course, not the forum to discuss this ECL provisioning and all. Mike. Just a minute. This is not the forum to discuss ECL and all, because unless the complete guidelines comes from the Reserve Bank of India, with a plain reading of the circular which comes to my mind, plain reading of that, there will be a higher requirement for restructuring. And second one, the SMA, where the 12 months PD will be calculated and in a restructuring lifetime PD. And then the NP also lifetime PD, and fourth one is the undrawn part. These are the 3 or 4 major things which I observed from that. From my bank's perspective, what should be my call? So my call is that I'm already having 95, so NPA is no issue. The second issue is the restructuring. Let us take that into account. And I'm telling you, as per the guidelines, also the RBI stated 5 years time. In number of circulars, RBI allows the 5 years time. Even when the pension provisions came, even they allowed 5 years time to amortize. In a fraud, they allow 4 quarters to amortize. This is the higher side they allow so as to strengthening of the system. But the banks generally do earlier than this. And those banks who are having strength in their balance sheet would like to do earlier than this and move forward. So our approach will continue to be of that type of a bank.
Thanks a lot. Just one question on this. Are you giving the calculation of ECL based on certain models to RBI on a regular basis or no?
We are calculating, but things are not stabilized, sir. So different banks have different, when the things are not clear, how will you compare each other?
Right.
So it is in an evolving stage actually. In reality, it is an evolving stage. Okay. And RBI, that is why RBI itself has said that in the draft circular, if your existing provision is higher than your ECL provision, you keep that provision. The way they have done in a capital adequacy guideline when the Basel II and the Basel III came.
Right. Okay. Thank you very much and wish you all the best.
Thank you.
Thank you. Next question we have from Mr. Chintan Shah. Please go ahead.
Thank you for the opportunity. Sir, I have first question on the ECLGS. So what would be our outstanding portfolio on the ECLGS and what is the NPA from that portfolio as of now? And sir, secondly is on guidance part. So sir, any qualitative comments on the guidance on asset quality, that is GNPA, NNPA, slippages and recoveries for FY24 would also be helpful. Yeah, thank you.
GECL one by one, I'll tell you. GECL, we have given 11,800, right? Today, outstanding is 7,200, right? So it means 4,000 had come. So around 40% of the money has come. What is the NPA? NPA is 537 crore out of the 12,000. So around the NPA is 4%. So it means 96% of ECL GS is behaving good. So just a minute. Are you getting my voice? Just a minute. Hello? Are you getting my voice, sir?
Yes, sir.
Okay. So this is a ECLGS. So as on date, we are having a 7,200 and the NPA of this 537 crores. But what happens is 4,000 has come from the MSME book and as a result, MSME growth is appearing at 7%.
Okay.
This is the second point. Second point is your Second point is your GNPA and NNPA, right? You see quarter on quarter basis our GNPA is coming down. Right? It is now at a 5.95. Our endeavor will be to bring below 5 as early as we can. And 0.9 is a manageable number. Maybe slight bit here and there.
7.
5.95 is my current number.
Yeah.
In GNPA. Our endeavor will be to come it below 5.
Okay, and sir, and any guidance on slippages? Any thoughts on that?
Okay. The recovery was last time the target was 8,000 crore. We ended with 8,500 crore. So last time our recovery was better than our targets. For second point, if you go slippage versus recovery, 7,000 crore slippage and 8,500 crore recovery. You see last quarter even slippage was, recovery was more than the slippage. December quarter, recovery was more than the slipper. September quarter, recovery is more than the slippage. So our endeavor will continue to be having more recovery than the slippage. So in that way we will be able to control. In that way we'll be able to control our GNPA numbers and all.
Sure. This is quite helpful. Thank you.
Yeah, thank you, Chintan. Next question we take from Jay. Jay, please unmute yourself.
Yeah, hi sir. First, sir, this year and this quarter, our tax rate has been very minuscule. For full year 23, this would be around 11%. So how should we? I mean, earlier we had said that we now should be seeing normalized tax rate. So how should we look at the tax rate, maybe for near term or FY24?
What happens in this quarter, we have created the standard asset provision and created DTO on that. And because of that, the tax rate has come down. Now going forward, we are at 25%. So in a PBT level, it will be 25%. And of course, in the operating level, it will be lesser than this.
Okay. Secondly, sir, while we have said that, so far there was the repo rate hike and MCLR hike was already there, still the yields on loans have declined 2 basis points in this quarter, right? So, how would you explain this? I mean, if repo rates were to peak, assuming repo rates have already peaked, then cost of yield on fund should anyway, decline. I mean, what exactly happened in this quarter that yields declined? And now with at least 30% of their EBLR book will not reprice, then yields could have even more pressure going ahead.
No, I told you, because of interest reversals, 236 crore, right? It is 100 crore higher than the earlier one.
Yeah,
so
so
there's a 10
that
is a 10 bips impact, sir.
Correct.
Otherwise the yield would have been higher.
Yeah, so sir, even if you adjust 10 basis points, that would mean that the yields have gone up by 8 basis points only. Right?
But you see that I told you, we will not be able to pass on that entire increase in housing loan or auto loan. We could pass on only 170 bips as against the 250 bips because market is like this. Likewise, in the auto loan also, competition is there, na?
Right, so competition will stay only, right? So how
so
will
that is why it cannot be linear. It cannot be linear. Market forces decides.
Correct. And so yields pressure may continue and cost of deposits should only rise, right? As earlier deposits will come for repricing as the term deposit maturity would be 1-2 years.
This question I have replied now. How will take this issue? I told you one side is the investment side, second one is the MCLR side. Hello? Please.
Yeah, I think, sir, there is some disturbance.
We too know that the cost of deposit will increase, right? This is writing on a wall. Cost of deposit will increase and the deposit will come for repricing. It will be repriced. So how to take this situation? So one is you have to tackle from the income side. Cost side, it is increasing. Income side, from where the income comes from the investment, income comes from the credit book. So, but the investment, I have told you that we have increased our holding yield. On the same side, on the credit book, we are MCLR book is 59%. So this will also come now. 59 means 14%, no sir. I'm just telling you. 59 means 15% per quarter. I'm telling you.
Right.
Very simple language. 15% per quarter on an average. 1.6 duration of a liability. So 16% will come for repricing. 16 will come for repricing liability side. 15% will come on asset side.
Yeah. So that should ideally set off.
Not ideally set off again. Because their price will high. Here the price MCLR is not equivalent to your cost of deposit increase. So that is why we have taken the route of investment.
Right. No, that is very clear, sir. Yeah.
Very
Thank
clear
you
now?
and all the. Yeah. Yes, sir. Thank you.
Thank you. We'll just take last question from Mr. Ajmera. Please limit your questions maximum to one.
No, I was listening to Jain Saab, giving details explanation. Sir, just one or two small data point, and in between the voice was also broken somewhere, so I might have missed. So one was, sir, on this, when you said that in your cost, the employees cost, the provision of 100 crore additional. Sir, that was for the wage revision. But what about the additional pension where every bank is providing a larger amount every quarter? So in your case, it is not required or you have passed it on to the next quarter, sir? This is one.
No, sir, this is based on actuarial valuation. First point.
Okay.
Second point is it is calculated with respect to the yield, yield on an investment book. So if there is a shortfall, we provide.
Okay. So it is fully, whatever is required is provided for.
So if you year as a whole, you see last year we provided 1,800. This year we provided 2,100, but we are now mark to market. So that is an issue.
And sir, secondly, sir, I think we, in note number 17, we bought some agriculture loan in the loan of 1,322 crores. So if I'm not wrong, note number 17, Because so many
okay.
bank
You tell us,
are
sir.
coming.
No issue in note. You ask, I'll reply.
So 1,322 crore agriculture loan has been acquired with tangible security nil. So what are these loans? What kind of loans these are?
So what happens? We do purchases of pool. Then the JLG is loan, joint liability guarantee. So this is a part of our business. We are acquiring from this NBFCs some JLG loan based on the past track recorded.
So means there is no chance of any.
No, sir. Guarantee is there, because we know the behavior of the account. Earlier also we acquired.
All right, sir. And one was last one that NPA sold, one NPA where we got the provision reversed of 395 crore. So the total provisional reversal for this quarter only of that particular NPA 395 crore.
This is the yearly numbers. No, we have yearly disclosure. We have given side based on the ARC seller, right?
Okay, the amount realized is 439 crore on the NPA of 837 crore. So the provision reversal was 395. It is for the.
So point is that, sir, whenever we receive full amount and we are having 100% provision, so provision needs to be reversed.
So it is for the whole year. Okay,
right,
okay, sir. Thank you and all the best, sir. Thank you.
Thank you.
Sure.
Thank you, sir.
Sir, one question which has come in the chat box is on your NIMs, and secondly is on the if you can just help us with, like, you have a exposure to SpiceJet, which has one of the SpiceJet filed a case against the company.
SpiceJet, na?
Yeah.
But you ask SpiceJet?
Yes, sir, SpiceJet.
NIM I already clarified.
Yeah, NIM I think you have already cleared.
And a SpiceJet is a very, very minimum exposure. Very, very minimum. Okay. Even less than 50. Yeah? Right. Okay. So we are having actually exposure under ECLGS. And existing exposure is even the less than 20. Without it.
Sure, sir. That's helpful. So with that, sir, we'll close the call. But
nothing in go here.
Comments to make?
Nothing will go in here.
Nothing will go in here. Yes.
Okay, sir. Thank you.
So you have any final comments to make before we end the call?
Thank you all the investors, analysts for your continuous support, and we hope that the next year will be better than this. Thank you.
Thank you, sir.
Thank you, everyone.
Thank you.